Afternoon, everyone. I'm John Karantzis. I'm the CEO of ISX Financial, and I can see they've used my full name there just to complicate things. I am Greek, so we have very long names, but clearly I'm quite happy to be called John if there's any questions at the end of it. Now, when I was first asked to speak on this topic, the first thing that sort of stood out to me was the sort of topic name and the realm. Now, I don't know, I used to read fantasy books as a kid, and every time I think of realm, I think of the Middle Earth, and I think of a couple of dragons. And the first thing I conjured up was Visa and MasterCard as the two dragons, basically guarding their hoard of gold and making sure that no incumbent, no challenger can come and challenge the dragons at their Dragon Mountain. And in rides open banking on a small destrier, and the poor old knight is trying to challenge the incumbents. Anyway, now that I've given you my sort of view of what I thought the topic was about, I'm going to talk about something completely different. I have a background in law and engineering, so I'm going to bore you a little bit with the regulation. Then I'm going to talk to you a little bit about how I believe, or what we at ISX are doing to actually change the way open banking works, and how we are actually creating a substitute that is commercially viable for card payments online. Now, this isn't something we're going to do. We've processed a large number of transactions in the last few years. We are a deep provider of infrastructure to a number of banks and EMIs and PSPs. We're a technical aggregator for Pay UK, just like ACI and MasterCard. We provide on-ramp services to a number of central banks for banks, EMIs and PIs, and we also have our own EMI licences in the UK and the EEA. So we are speaking from a position of technical, let's say, connectivity as a tier one provider, rather than someone that is sitting on someone that is sitting on someone that is sitting on, which we tend to find is the case quite often nowadays. So most of us will be aware, or at least we should be aware, that the PSD2 has basically provided access to the account. With access to the account, what that means is that we've got third-party providers that can effectively offer payment initiation services or account initiation services. Now, the difference between that is, what we call in the industry read and write. So read is account initiation, and typical examples of that are Plaid or Yodlee, where they go and read the account and they get data from the account with regards to the payment services user, and they use that data to credit score or do KYC or something like that, to that effect. So it's reading the account. Then you've got the other aspect, which is what ISX basically focuses on, which is the payment initiation, or the right to the account. Now, the right to the account is the ability to push a payment from a bank via a third-party provider, commonly known as open banking. Right? There's a lot of open banking providers out there, and we partner with a lot of open banking providers. And what they effectively do is the push, and from the push, they just assume that some banking provider will actually catch that payment and then do something with it. Now, at ISX, we effectively, and I'll describe how or what we've done to close that loop and provide a substitute shortly. But before I get there, let's just talk about what the realm looked like before open banking. Obviously, we had the major card schemes. We've had Ideal, which is a huge success story in the Netherlands. We've had Sofort, which, the screen scraping success of Germany. Bank-to-bank payments, which are particularly clumsy, or clunky, I should say, but obviously the backbone of bank-to-bank payments. And we've had wallets, and obviously the most successful wallet is PayPal and Skrill and Neteller. Now, they've all offered different sort of advantages or disadvantages, but I think the king of online payments has been obviously cards, and cards have been dominant. And they've been dominant because they've got advantages over other payment methods online, or at least they had. And of course, momentum through numbers, they're international, they support multi-currency, cross-border, and there is also the fact that when a merchant sets up a payment in a cart, they receive that authorization which tells them that, subject to a chargeback or subject to a technical fault, they are likely to get paid. But here's the nub of it. Cards were invented, I think, they came about in the 1950s. Their settlement cycles are they can differ between merchants. So in some cases, they can give you T+1. In other merchants, they give you T+14 or even T+30, depending upon what they're doing. And the settlement cycle is always the part that is quite complicated because it can be subject to chargebacks, holdbacks, rolling reserves, and a whole lot of things which hopefully most of you aren't exposed to too much, but it can get complicated very, very quickly. But obviously the upside is the easy use for the consumer and the easy use of the consumer no matter where they are in the world, because cards are global. Disadvantages, as I just mentioned, the long settlement periods, fraud. Fraud has been a challenge until strong customer authentication came in. But SCA, of course, is a European thing and not a global thing. So if you're a merchant that's taking international payments, you're still exposed to a potential of fraud unless you're using 3DS. And 3DS internationally has its ups and downs. It's great in Europe, but it's not so good cross-border in some cases. And of course, there's the cost of cards. They can be quite expensive as a payment method. Now, what we did is we had a look, or I suppose we've had a look at the alternatives to cards. And when you look at what is out there, and I mentioned these before, whether it's Ideal or so forth, bank-to-bank, wallets, or even open banking, the first two of those are very localised, so Netherlands and Germany. If you've got a customer that's sitting in the Nordics or a customer in Italy, you'll find that Ideal and so forth, Ideal obviously doesn't have coverage, but so forth is pretty marginal. So unless you're using a card, you're relying on a bank-to-bank transfer. If you're relying on a bank-to-bank transfer, even if it's SEPA and SEPA Instant, you still have to encourage the customer to basically push that payment to you, copy and paste an IBAN and do all these things to get that payment to you. So obviously open banking has assisted in that way by being able to integrate with the cart, the merchant's cart, and effectively put the destination IBAN into place and allow the consumer to use a more streamlined process to set up the open banking or the push payment. Now, I had a comment earlier from David Rintel that the open banking experience is a little bit, let's say, disjointed, right? And one of the reasons for the disjointment is that every bank presents a different interface through the open banking interface. Now, there's a good reason for that. Open banking effectively is a portal to the account servicing provider. So if the consumer has an account with Barclays or they have an account with Deutsche, then they're obviously used to dealing with Deutsche or Barclays. They're obviously used to the user experience of Deutsche or Barclays. And when they see an open banking window pop up, they want to have the familiarity of Barclays or Deutsche. They don't want a third party interposing in there because in our experience, that gives them the sort of, little bit of the shakes in terms of are they really dealing with their bank or dealing with someone else. Now, this is a very different proposition to starting a new service with a clean UI, a clean user experience, and trying to push through something that isn't open banking. But the whole premise of open banking is that the consumer is dealing with the bank that they are already familiar with, including its warts, right? So if you don't like, or irrespective of what we think as an open banking provider, initiator, if a consumer is happy enough to bank with Deutsche or Barclays or Lloyds or whoever it happens to be, then that's their choice. That's a choice they've already actively made and they're familiar with that UI. So it's not appropriate to sort of compare that UI to a Blick or someone else because that's not what the consumer has chosen. Anyway, moving on from that. So the card alternatives in Europe at the moment are pretty much this. And of course, they haven't made a lot of headway in some regards, except perhaps for Ideal in the Netherlands and so forth in Germany. We have, of course, seen from our own experience that in order to create what we consider to be a viable substitute, we need to be able to take that card experience both from a consumer perspective as well as a merchant perspective and mimic that as much as possible. So one of the aspects that we found was that it's not sufficient to simply push the payment. So if you contract with a push provider, someone that only does the payment initiation and then pushes that payment to your third-party bank, you'll miss out on the sort of ecosystem or experience that is required as a merchant to actually offer your consumer a substitute service for cards. So when we think about what the card scheme regime offers, it offers an authorisation which tells you a payment has been pushed. Then it offers you a notification sometime later that the funds have been settled, right? And all this is automated. And then it also offers you a portal to perform refunds and customer management. Now, without those things, it is almost impossible for open banking to compete with cards. So we took a view, and of course being an infrastructure provider, that if we provide all of that ecosystem and we create that ecosystem, then we have something that is completely viable as a substitute for cards. So what we see that we need to do is we obviously need the access regulation, which is in place under PSD2. We've put in place as a PISP fund notifications for send and receive. So when you consider the cards settle in a day or up to 30 days, the SEPA instant or the FPS network being the same day mean that a consumer can effectively push a payment using open banking. It can be received at a core banking system, right, almost immediately. That core banking system can then notify the merchant that the money has been received, and the merchant has access to that cash flow same day, 365 days a year, right? But the infrastructure required to put that together far exceeds the basic infrastructure that a standard, third-party push provider has in place at the moment. You need all of that aspect. So you need to be able to perform the push payment, the SEPA instant or the FPS transaction processing, the core banking sitting on an account that you issue to the merchant, and then be able to issue the notifications as well. So effectively emulate the card scheme process in its entirety in order to give the experience both to the merchant and to the consumer. So we've done all that. And it's been quite a difficult or long journey to do that because obviously integrating to central banks and making all this happen has been challenging. We've partnered with Wix most recently, and Wix being a provider of services to I think 30,000 SME merchants means that we had to find solutions to some of the problems. One of the ones that sort of hit us quite quickly was refunds, creating a refund portal such that we can refund back to the original sender an amount up to the original transaction amount, the same way you do for cards, and being able to make sure that we can offer the same capability your typical card acquirer will offer to a merchant via an open banking dashboard. So all of that's been put in place, but it's been quite challenging to make that happen. I think once we got all that going, what we've found is we went from being predominantly a card acquirer with I think 90% of our revenues from card acquiring to our revenues now almost doubling or tripling in the last couple of years and being predominantly from open banking. We are now seeing that our card acquiring is down to about 2% of our book and our open banking is almost the balance. Now that's an inversion. When we look at the sort of numbers we're doing, and I'll put them up shortly, but we've processed over the last 2 years, and I'm not saying all of this is open banking, but over the last 2 years, 3 years actually, we've processed about 75 billion euros. And it's quite a staggering amount that can go through the SEPA network, which is predominantly being driven by front-end services that are open banking. So we've got here a quick video of how it works. Now, going back to David's point, the authentication piece is what the user or the consumer expects. So if they authenticate in a certain way at Deutsche, they will authenticate the same way with us. And that's the experience they've bought into. Right? So it's not up to us to change their banking habits. It's up to us to basically confirm that we are using their original bank and make it as seamless as possible. Right? So I think with that in mind, I'm almost out of time, and I thank you very much for listening to me.